Dear finance professionals and students, welcome to podcast of Fca Deepak Rao, a practicing chartered accountant. Daily news and updates for 16th December 2024. The Indian Income Tax Department has recovered Rs 37,000 crore over the last 20 months from individuals who failed to file returns despite having taxable income. Analysis of high-value transactions like property and luxury purchases revealed discrepancies. A stricter tax collection system aided in tracking these transactions, leading to recoveries, including Rs 1,320 crore from those engaged in high-value deals. Developing nations already set for a turbulent 2025 are having to cope with ballooning interest payments on $29 trillion of debt that built up over the last decade. A record 54 countries are spending more than 10% of their revenues on interest payments, according to the United Nations. Some, including Pakistan and Nigeria, are using more than 30% of revenue just to pay coupons. The sum, around $850 billion in total last year for both foreign and local debt, is forcing countries to divert money from domestic spending on hospitals, roads and schools while raising risks for emerging market investors. Indian companies raised a record-breaking Rs 1.21 lakh crore through qualified institutional placements or QIPs in 2024, a twofold increase from the previous year. Strong market conditions and high valuations fueled this surge, with 82 companies utilizing QIPs until November. Major players like Vedanta and Zomato led the fundraising, bolstering financial reserves and capitalizing on positive investor sentiment. QIP is one of the quickest products to raise funds from institutional investors. It is designed for listed firms and investment trusts, which allow them to mobilize funds quickly from institutional investors without the need to submit any pre-issue filing to market regulators. Ahead of the GST Council meeting on December 21st, payment gateway operators have submitted representations to the Finance Ministry, opposing the proposed 18% GST on commissions earned on digital payments below Rs 2,000. Operators argue that the levy could hinder the growth of digital transactions, especially in smaller towns and rural areas, by shifting the financial burden to merchants. Currently, payment aggregators charge fees ranging from 0.5% to 2% for processing credit and debit card payments. They are exempt from GST on transactions under Rs 2,000. But the Fitment Committee views these firms as intermediaries rather than banks, warranting the proposed tax. Pharmaceuticals, FMCG and oil and gas were among the top hirers of niche profiles like artificial intelligence and machine learning, cybersecurity, cloud computing, data science, and big data analytics and blockchain in 2024. Due to the increased demand for these profiles and the shortage of experienced talent, companies led by Global Capability Centers or GCCs paid up to 30% higher salaries for these profiles, bringing the average pay appreciation to around 20% over 2023. As companies move to digitize their operations and processes, enterprises are increasingly using a hybrid model where they not only outsource a part of their digital services requirements to ITS companies, but also growing their own tech talent pool, resulting in increased demand for these profiles.
This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.